It's Alyssa Quorum here, and today on Technical Analysis, we're talking all about Etsy, our stock of the day. Now, it's risky to buy a stock outright ahead of its quarterly earnings report, but that doesn't mean investors can't benefit when a stock gaps up on earnings. So it's key to keep an eye on stocks that are setting up in bases ahead of their quarterly reports, so you can be ready to strike if and when they gap up on earnings. Etsy is working on a base headed into its earnings report, so it's on our radar. So let's take a look at this daily chart. Now, Etsy is working on a flat base with a 73.44 buy point. Now, shares are currently trading about 8% below that level. Etsy briefly dipped below the 50-day line, but was able to retake that level relatively quickly. Now, the relative strength line is lagging a bit, but shares are still some 8% below their high. So if Etsy can break out on earnings, look to see if that relative strength line can hit new high ground. Since the RS line measures price performance versus the S&P 500, that would be a bullish technical indicator. Now, Etsy gapped up in heavy volume on its last quarterly earnings report, but Etsy does have a history of reversing on gap ups and erasing gains after making big moves. Given that behavior, investors should be cautious here. Etsy earnings are due after the close on Wednesday, May 8th, and analysts expect earnings for the online marketplace for handcrafted goods to jump 40%, while sales pop 40% too. That would mark deceleration from the prior quarter, but that's strong growth nonetheless. So whether you're using IBD's earnings option strategy or buying the gaps, investors should be focused on stocks that could potentially move big on their earnings reports. And finding top stocks in bases is the first step. For Investors Business Daily, I'm Alyssa Quorum.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube.
If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.